I was chatting with my students on WhatsApp and I forgot that I'm supposed to be on YouTube. Sorry, I kept you guys waiting. Sorry. We're just having, a great time on the WhatsApp group. We're just having a great time. You're welcome to today's session. You're welcome. It's so good to have you in today's class. If there's any question you have, if there's any pair you want me to analyze, please just drop it in the comment section. Okay, we have just 20-25 minutes to spend on YouTube. Okay, so please, if you have any question or any pair you want us to analyze, please drop it on the group. I can see Mr. Peps, I can see Mr. Ned. Okay, so let me start with Australian dollar USD. I'm currently buying Australian dollar USD. I have a trade on Australian dollar USD. Can you hear me? Can you hear me? Can you hear me? I believe you can hear me. I believe you guys can hear me, right? All right. So I took a trade on Australian dollar USD. I bought Australian dollar USD. This trade was executed around 3 a.m. Nigerian time. After the major news for Australian dollar got released, that was around 2:30. The news was released 2:30 Nigerian time. I executed the trade, I think 2:45 or 3 a.m. That was when I executed the trade. Now, the data that was released was negative for Australian dollar, but the difference between the actual and the forecast wasn't much. I think it was just 0.1%. Okay, it was just 0.1%, and technically AUD USD is bullish. Technically, it is bullish. So since the difference between the actual and the forecast wasn't high, I expected AUD to still gain some value. That was why I bought. So I waited for price to pull back to fill a fair value gap, okay, before going bullish on Australian dollar USD. And where is my target? My target is this previous high. This is my target. This is my first target for AU. There's a high probability they're going to clear liquidity at this previous high. So that's the target for Australian dollar USD. Okay, once price hits that level, I'm going to adjust my stop loss to few pips below this level. You can see where my stop loss is at the moment. You can see my stop loss where it is at the moment. So if they are able to hit that level, if they are able to hit that high, I will adjust my stop loss to few pips below my entry level. Okay, but I'm expecting AUD USD to sell today. I'm actually expecting AUD USD to go bearish. Maybe CPI will make that happen. Okay, maybe CPI will make that happen. I'm expecting a bearish move on Australian dollar USD today. Okay, so but let's see the data that will be released for CPI. Okay, if it is positive for dollar, then we should go bearish on Australian dollar USD. If the news is positive for dollar, then you should consider selling Australian dollar USD. So if you don't have a trade on Australian dollar USD, if you're not buying Australian dollar USD at the moment, please wait for CPI to be released before you decide to buy or sell. But I expect the AUD to go bearish today, meaning I expect the data that will be released today to favor the dollar. So if it comes out positive, I would be selling Australian dollar USD, and I'm likely going to hold the trade till it's 100 pips or hold it till Friday. My target will be minimum of 80 pips. That will be my target on Australian dollar USD. So all you need to look out for after the news is released is a bearish reversal pattern. I believe you know all these patterns: shooting star, engulfing pattern, doji, spinning top, engulfing pattern. Those are 4 major candlestick patterns you should look out for after the news is released. Okay, once you see a bearish reversal pattern, execute sell on Australian dollar USD. I hope that is clear. Okay, I hope that is clear. Ensure you apply stop loss, please. Ensure you apply stop loss. Trading is a game of probability. Okay, you might have a good setup and the market will still go against you. That is why we use stop loss. Okay, you won't win all your trade. Some trades will go against you, irrespective of how good the setup looks. It will go against you. So always use stop loss and don't over leverage. Please don't over leverage. Okay, now someone said we should look at EU. So that's my take on Australian dollar USD. Don't buy Australian dollar USD at the current market price. It has already moved. wait for CPI news to be released, then look for maybe a bearish setup if the news favor dollar and sell. Okay, now let's move to EU. EU also is bullish at the moment. It is bullish at the moment, and it is likely they're going to hunt for this level, this stop loss at this level. Now, the reason they would hunt for this stop loss, they will hunt for that high. Let's go down to lower time frame. At this point, after the formation of this candlestick pattern we have here, this bearish pattern, if you go down to 4-hour time frame, okay, if you go down to 4-hour time frame or 1-hour time frame, there's a high probability that a fair value gap was created. There's a high probability that a fair value gap was created, and that's the reason price had to pull back at this point to fill that fair value gap. Let's go down to lower time frame, 4-hour. So you can see the fair value gap was created at this point. Can you see that? You can see that. So on a daily, you can see what played out. The fair value gap was created. Price had to pull back to fill that fair value gap. And you can see after that gap got filled, what happened? Price collapsed. It dropped. Okay, so there's a high probability they might want to test this level again. Why? A lot of retail traders have executed sell after the formation of this candle, and their stop losses will be at this level. So there's a high probability they might want to hunt for the stop losses before going bearish. So I would advise that you wait for price to hit this level. If you decide to buy from this point now, if you decide to buy, this is just like 40 pips from the current market price. 40 pips from the current market price, and you will set your stop loss maybe around this area. And if you look at the risk reward, you will see that it does not make sense, right? It does not make sense. The risk reward will be very low. So patiently wait for price to hit this level and look for a sell opportunity. That's what I will advise. But if you still want to take the risk to buy to this level, it's okay. But you ensure that your stop loss is around 40 pips. Your stop loss should be around this level. And if you are setting your stop loss at this level, look at it, calculate it. If your stop loss is at this level, 0.758, and the market is currently at 0.830, that's about 80 pip risk. 80 pip risk, and you are targeting 40 to 50 pip. That's not a good risk reward. It's not a good risk reward, so you should avoid such trade. Okay, so I would be looking for a sell opportunity, okay, on Euro USD. If price is able to hit this level, okay, I would sell Euro USD, because if you apply Fibonacci, if you apply Fibonacci from this swing high, okay, if you apply Fibonacci from this swing high to this swing low, you can see that price is already at what? At a premium level. So price could even reverse from the current market price. If a bearish reversal pattern forms, at this level where price is now, I would go bearish. Okay, I would go bearish if a bearish reversal pattern forms on Euro USD at this level. Price is already at premium. You would also see that we had a fair value gap here. Can you see this fair value gap? So this pullback could just be to fill this fair value gap. As you can see, we had a very big fair value gap here. Okay, so this pullback is to fill that fair value gap or clear liquidity at previous high. That is it. Okay, but I would advise you wait or look out for a sell opportunity. You cannot buy at premium, right? You cannot buy at premium. So you need to wait for price to pull back to discount. So look out for a bearish reversal pattern and sell. I hope that is clear. Look for a bearish reversal pattern. GBP JPY, I dropped the analysis. Mr. David, I dropped the analysis on GBP JPY on the WhatsApp group. Watch the video on the WhatsApp group, okay? GBP JPY is bearish at the moment. Let's look at the chart. GBP JPY is what? Is bearish at the moment. Okay, I dropped the analysis. I have a trade on GBP JPY. Immediately I executed the trade, or few minutes after I executed the trade, I dropped the video why I took a sell on GBP JPY. If you apply your Fibonacci too, let's apply Fibonacci on GJ. Let's take it from this swing high to this swing low. Where is price right now? Price is at premium. Okay, price is at what? Premium. Even if you work with this previous swing high. If you work with this previous swing high, the market is still at what? A premium level. Okay, it's still at a premium level. Okay, so at premium level, a bearish reversal pattern has formed. So let's work with this swing high. Okay, so you can see price is at premium. Now, when price gets to premium, the next thing you need to look out for, don't complicate things. Don't complicate it. Just look out for a bearish reversal pattern at a premium level. Keep it simple. Once price gets to premium, wait for a bearish reversal pattern to form and sell. When price gets to discount, wait for a bullish reversal pattern and buy. Keep it simple. Most of you, you know too much. You know too much. That is why your account is not growing. Too much analysis results to analysis paralysis. That is the problem some of you have. You know too much. Too much. Keep it simple. Please, keep it simple. So after the close of yesterday candle, let's see how 4-hour candle closed. Let's go to 4-hour. So see what happened yesterday. Look at the candle that closed, last candle that closed on 4-hour yesterday. It closed as a spinning top, right? It closed as a spinning top, which indicates change in trend from bullish to bearish. Can you see it? Spinning top. And the next candle closes bearish, right? The next candle closes bearish. How do you trade a candlestick pattern like this? Since the body of this spinning top is bullish, the rule is that you wait for the next candle to close bearish. You want to be sure there are sellers in the market before you sell. So after the close of this bearish candle, I think this is the first candle for today's market. After the close of this bearish candle, that would have been the right time to sell. If you are trading candlestick pattern, this would have been the right time to sell. But what happened this morning? Remember, after the formation of this candlestick pattern, this spinning top, a lot of retail traders would have executed sell last night. And where would they set their stop loss? Their stop loss will be at this level. Okay, now I just adjusted my stop loss to this level. My stop loss was far above this level, like 30 pips above this level. But since I'm in profit, I had to adjust my stop loss to this level. Okay, so most retail traders had their stop loss at this level. So what happened this morning? The first thing they did this morning was to clear liquidity, was to hunt for the stop losses at that level. That was what played out this morning. This candlestick, these two candlesticks, that was what they did to clear stop losses. They knew that a lot of people would have entered sell at this point. Others would have entered sell after the formation of this spinning top. So what they did was to clear liquidity before going bearish. So what you have now is an engulfing pattern. And the fact that this engulfing candle closed below the low of this bullish candle that formed before this reversal patterns. The fact that this candlestick, this engulfing candle closed below the low of this last bullish candlestick that formed before this reversal patterns indicates that there are more supply than demand. It indicates that we have more sellers. More traders are willing to sell than buy. So this is a bearish reversal pattern. What else are you looking for? What other setup are you looking for? Confirmation are you waiting for? You take the sell, set your stop loss. If it goes against you, fine. If it goes against you, fine. Take that loss. Wait for the next opportunity. Losses are inevitable. Losses are inevitable in this business. If you are not comfortable taking losses, forex trading is not for you. Okay? That is the truth. If you are not comfortable taking losses, forex trading is not for you. You have to be okay with taking losses. It's inevitable. Okay? The key to successful trading is risk management. Ensure that whatever risk you're taking is less than the reward. Ensure that your reward is at least 2 times the risk. Okay, 2 times the risk. If your strategy has a 50% winning rate and your risk reward is 1 to 2, you would be profitable in the long run. You would be profitable. And when we say your system has a 50% win rate, so out of 10 trade, you're going to lose 5 trade. Out of 10 trades, you're going to lose what? 5 trades. And the first 5 trades could be losing. The first 5 trades you execute might go against you. Are you getting me? It might go against you. and the next 5 trade that will follow will be positive. That is what it means to have a 50% win rate. That you have a 50% win rate does not mean your first 5 trade will be profitable. It can be loss. That's why we always advise you that you don't over leverage, so that if your first 5 trade are losses, you will still have money to trade and recover, because the next 5 trade has a probability of going in your direction. You'll be able to recover. But most of you, the first 5 losses, you have blown the account. You have blown the account. Now you have opportunity to recover, but there's no money to trade. Risk and money management is the key. Risk and money management is the key. The reason your account is not growing is that your risk management is very poor, very, very poor. You are risking $5 on a trade. You see $1 profit, you close it. You are risking $10 on a trade. You see $2, you close it. That is why your account is not growing. Okay, so that is it for GJ. I'm bearish on GJ. This will be my first target. This low here. This is an area of liquidity. So I'm expecting price to pull back and fill and hit this level. This will be my first target on GJ. Okay, this will be my first target for GJ. So price is pulling back now. Why is price pulling back? After the formation of this engulfing candle. After the formation of this engulfing candle, let's go down to 1 hour. I'm sure a fair value gap has been created on 1 hour. Okay, so we had a fair value gap here. So it's likely going to pull back. It's likely going to pull back to fill this fair value gap. Okay, it's likely going to pull back to fill this fair value gap. Okay, or after, if this candlestick closes bullish, just pick your Fibonacci tool. Pick your Fibonacci tool, apply it from this swing high to this swing low. That's if this candlestick closes bullish, the current 1 hour candle. So this level will become your swing low. Wait for price to pull back to premium. Just wait for price to pull back to premium. Then look for sell. Okay, so that is what is playing out now. It's likely price will pull back to fill this fair value gap or its level 75. Then you look for sell. You cannot sell at the current market price. If you sell at the current market price, you're taking a very high risk. Price is at discount. You don't sell at discount, you sell at premium. So wait for price to pull back to premium before you sell. That's my take on GJ. I'm very bearish on GJ today. Okay, I'm very bearish on GJ today. Which other pair do you want us to look at? New Zealand USD is positively correlated with Australian dollar USD. Okay, New Zealand USD, George, Ifeanyi, New USD is positively correlated with EU. I think we've analyzed EU and we've also analyzed AUD USD. Same with EU. NZD USD is bearish. That's my expectation on New Zealand USD. It is what? Bearish. I've analyzed GJ. GJ is positively correlated with EJ. Okay, 70 to 80% of the time, GJ and EJ will move in the same direction. Okay, so let's just look at EJ. EJ. Okay, as you can see the pattern we have on EJ? Similar to what we have on GJ. So they are positively correlated. So if you're going bearish on GJ, you cannot be buying EJ. You need to go and learn correlation. You need to understand how these pairs correlate. It's very important. It will help you manage risk properly. Go on Google or YouTube and search for currency correlation or intermarket correlation. First start with currency correlation, currency market correlation. Then you can also search for intermarket correlation. Intermarket correlation. Very important that you know these things. It will help you manage risk properly, to help you know what you're doing in the market. Okay, go and Google, do a Google search or YouTube search. It's one of the reasons your account is not growing. You are buying GBP USD, you are selling Euro USD. You are buying AUD USD, you are selling Euro USD. Your account won't grow because both pairs are positively correlated. So you make profits on one, you make loss on the other one. At the end of the day, you are just breaking even. The account is not growing. So if you want to buy AUD, there's no need buying or selling New Zealand USD, or buy UD at the same time you are buying New Zealand USD. Just trade one of those pairs that are positively correlated. You don't have to trade AUD USD, NZD USD, Euro USD, GBP USD. Just focus on one pair. Okay, so Euro, that's my take on Euro JPY. Euro JPY is bearish, but I will not advise that you sell now. As you can see, price has already moved. So if you are not in a trade now, if you are not selling Euro JPY already, wait for price to pull back to fill this fair value gap. Okay, I think there's a shift in market structure at this point. I think the shift of market structure occurred here. Okay, it has not even occurred. Okay, it has not occurred. But if you go to lower time frame, like 15 minutes, shift of market structure would have occurred. Okay, this is 15 minutes. So shift of market structure has occurred around this. This is break of structure. Shift in market structure has already occurred here on 15 minutes. So we might see price pull back to fill this fair value gap before going bearish. For those who are yet to execute a sell trade on Euro JPY, I would suggest or advise that wait for price to pull back. This is not a good price to sell. It's not a good price to sell. Okay, let's look at gold. Gold. Okay, gold. My buyers on gold for today, though I am buying gold at the moment, I'm bullish on gold at the moment, but I expect gold to go bearish. Maybe CPI will make that happen. Okay, I expect it to go bearish. Let me start with the daily. So you can see right now, anything can happen on gold right now. You can see we had a fair value gap at this point. Okay, we had a fair value gap here, and you can see price has filled that gap. Price has filled that gap, but it is possible they want to clear this liquidity at this previous high, because a lot of retail traders would have executed their trade and their stop losses is at this level. So they might want to clear liquidity. So this is my target on gold. I hope it will hit that level. Okay, I hope it will hit this level. This is my target on gold. That's my target. I think it's about 60 pips from the current market price. That's my target on gold. But if you go down to 4-hour time frame now, okay, 4 hour is still strongly bullish. Okay, it's still strongly bullish. Let's go to 1 hour. You can see 1 hour candle. If you go to 15 minutes, we have a bearish reversal pattern on 15 minutes right now. Can you see this? We have a bearish reversal pattern on gold right now. But the fact that this is one thing I want you to notice here, we had what looks like a spinning top here. This is a spinning top, and the next candle that formed as a doji. Can you see that? It forms as a doji, and the next candle that formed after the doji is what? A bearish candle. A lot of retail traders would have jumped in and start selling. A lot of retail traders would have jumped in and start selling, and their stop loss will be at this level. They will definitely want to clear their stop losses. Okay, the reason I wouldn't jump in and start selling is that the low of this bullish candle that formed before this doji has not been cleared. If I want to risk selling gold, I would have to wait for a 15-minute candle to close below the low of this bullish candle that formed before the doji. But as you can see, what happened? Price just tested that low, and as you can see, there's a rejection from that level right now. There's a rejection from that level, so I cannot jump in and start selling. But if a 15-minute candle this level, I might just close my trade. I might just exit my buy trade. Okay, I can just close my trade. Okay, but let me see what's happening on 5 minutes. Okay, 5 minutes. So I'm not going to just exit my trade after a candle closes below that level. A fair value gap was created, as you can see here. Okay, you can see this fair value gap that was created. Can you see this? So if a 15-minute candle closes below this zone, I'm exiting my trade. I'm closing the trade. If 15 minutes, so this could just be a pullback to fill this fair value gap. This could just be a pullback to fill this fair value gap. So let's see how the 15-minute candle will close. If 15-minute candle closes below this level, I'm out of this trade. I'm out of gold, and I'll wait for CPI needs to be released. If CPI favors dollar, then I'll go bearish on gold. If the CPI is positive for dollar, I would go bearish on on gold. Okay, but right now gold is still bullish. Gold is still bullish. Okay, this is not the right time to sell. Gold is still bullish. Okay, it is still bullish. I hope that is clear. Any other question? Any other question? That will be all for today's session. If there are no questions, you have any question, let me know. Let me know. Yeah, life itself is all about loss and profits. Every loss, every business you do, you must incur losses. It's how you manage the losses that will determine how long your business would survive. Okay, it's how you manage your inflow and outflow. Okay, yeah, the key to success trading is taking loss. You take loss, manage risk. That is the key to successful trading. So thank you very much for your time. If there are no questions, I would have to end this session. I appreciate you all for always showing up for the classes, and I hope you are getting value from the accounts. I hope you're getting value from this live stream. Please like the live stream. Please give the stream a thumbs up. Please like the like click on the like button. Also, if you are new, if this is your first time, subscribe to the channel so that anytime I come online, you get notified from Facebook. Like I say, keep following me, keep following me. If you follow me 2-3 months, you will definitely experience change in your trading business. Your accounts will grow. Your accounts will grow. Just keep following. Hopefully by next week I will start giving signals. Okay, I might be giving signals on the live stream from next week. Australian dollar, USD, Euro, Aussie, and gold. By next week, I might be giving a call on those pairs. Okay. If you are not on the WhatsApp group, send me a message so that I can add you to the WhatsApp group. A lot is happening on the WhatsApp group. Before I come on live on YouTube, most times I have dropped some signals on the WhatsApp group. I've dropped some analysis on the WhatsApp group. Okay, for example, this GBP some of the people on the WhatsApp group executed the trade and they are in profit already. So ensure you are on the WhatsApp group. Okay. Please like the stream so that others can get to see this video. Yeah, thank you, Mr. Isaiah. Yeah, keep it simple. That is the secret to successful trading. Just keep it simple. Don't complicate things. Don't complicate things. Wish you guys a profitable trading day. My WhatsApp line is open if you have any question. Okay, let me know. So by 3 p. Is it 1:30? Yeah, maybe I will do analysis on CPI. After CPI is released, I might drop a video on the WhatsApp group. Okay, I will share my thoughts with you guys on CPI when it is released. Okay, or before it is released, I will drop a video. I will drop analysis on the WhatsApp group. Okay, bye for now.